Hello and welcome to another episode of This Week in Business. This time around, we have a few tidbits of honestly very interesting pieces of news of different levels, but all in all, quite interesting. Some developments that I did not think I would see anytime soon, and yet here they are. So, in order to begin, let's start with Spain. So there's a Spanish bank called BBVA and it will start offering Bitcoin and Ether training. Now, I'm not the most familiarized with cryptocurrencies, but I mean, I do know what they are. And according to this piece of news, the bank will start letting its users in Spain buy, sell, and manage these two cryptocurrencies through the bank's app. They first needed the bank to secure a permission from the Spanish Securities and Exchange Commission because there is a regulatory body in the European Union named MiCA, which says that you need this sort of thing in order to start offering these services in your country, right? So, alongside Germany's Deutsche Bank and France's Societe Generale, this is another front runner for such services in Europe. Now, I will say, I think it's a bit weird that cryptocurrency becomes regulated. I thought personally, again, not the most familiar with it, but I always had the idea that cryptocurrencies were preferable because they were not regulated and because you had more freedom as to how you could use them, or there would be no such bodies overseeing operations. But the advantage of regulation in this instance would be that the bank is saying that they will offer the protection services in order to maintain your wallet safe and sound. I don't know exactly how they can manage to do that or how well this is going to go, but I thought it was interesting to see that a big bank is going to start offering these services in Spain. So, I don't know. Interesting. Now, Intel. Okay. So Intel has not been doing so hot. They are 50%, 54% down in their stock value over the past 12 months, and they're not doing so hot. So, something interesting that happened now, however, is that Taiwan Semiconductors has been in talks with Nvidia, AMD, and Broadcom to run Intel's chip manufacturing operations. These operations for Intel had an $11.6 billion loss on the year, and this piece of news sparked a small increase in the company's stocks, a 3% increase. Again, considering they are down 54% in value, it's not much of a recuperation, but it's something. Another factor is that Intel planned to open a big campus in Ohio this very year, but those plans have been delayed until 2030. So Intel is an important company for the United States because it's the only one, as far as I'm aware, that makes these, computer chips that are very important for a huge variety of things in just general life nowadays. Their biggest competitor being the Taiwanese semiconductors, which are very close to China, and there's a lot of risk involved there. So, makes sense that Intel is an important company that the United States really wants to protect, even if it's not been performing particularly well. It's curious to see that in this instance, it is their competitors that are essentially potentially going to help the company out by taking over its manufacturing operations. I thought that was very interesting. So, the next piece of news is China. Hey, look at that, China. So, it is imposing tariffs on Canada because they have an ongoing trade war. So, Beijing will impose 100% tariffs on canola oil cakes, and peas, plus a 25% import levy on aquatic products and pork starting the 20th of this month. In other words, in about a week. This is a response from the two Ottawa's 100% import levy on Chinese EVs and a 25% tariff on steel and aluminum. The reason Canada put in these tariffs was because Trump threatened to put 25% tariffs against Canada unless they put more restrictions on certain Chinese products. So Canada put these tariffs against China in order to prevent Trump's 25% tariff. And well, now China has responded in their own right. This is what happens when you start a trade war. it never really benefits consumers much, and it's usually more of a political weapon than it is an economic one, to be honest. At least that's what it seems to be nowadays. Hey, I'm no big China fan myself, but I also think that putting these tariffs on China are just not going to really benefit any country much, nor do I think they are going to get a lot out of it, considering the size of that country's economy and their importance in the global market. But I don't know. I'm not a politician. So, continuing, their European Union has a plan to save Europe's car industry. Okay, so Europe has a very big, important, historical car industry, but it has been performing very poorly lately. There's a lot of reasons for this, and some of it has to do with the fact that Europe wants to have zero emission cars as the standard in 2035, by 2035. So they've tried to incentivize the creation of electric vehicles in various manufacturing companies and whatnot in Europe. Problem, they have come short. They have not been able to really keep up with their sales expectations, nor have they been able to really produce a lot of the important materials and components necessary for these types of vehicles in Europe. In other words, they are lacking with the supply chain. And this is something that this plan is starting to address. Batteries, which are very important for electric vehicles, go figure, are in high demand, and the materials necessary to make these batteries are in high demand. They're not really very easily procured. So this is a very important weak point for manufacturers of cars in Europe, as well as the fact that there isn't a lot of charging port infrastructure in the entire continent. So this plan is investing like enormous amounts of money. It was something around the ranks, around among the ranks of $100 billion, something like that. It was kind of absurd in order to try to, make these realities possible by 2035. They have a decade to make this a reality. And the point is, who knows if it's really going to work? The people that work in the car industry have stated that this isn't enough, that there should be more subsidies to be able to produce these sorts of vehicles because case in point, there just is not really even that much demand for them. So they kind of have to subsidize the cost with other ways. And, well, it's tricky. Additionally, the European Union Commission has become more flexible with carbon emission goals during this transitional period. But the dates that they established, as in by this year, you cannot have, cars that have CO2 emissions, those are set in stone. Those are not changing. But during this period, until they become, set, until those dates come, there's a bit more flexibility for each country to achieve their CO2 emission goals. So yeah, quite interesting to me. I figure that Europe was going to try to bolster its car manufacturing industry because, again, very big over there, very important, and they have struggled to compete hell with China. They have just not been able to really have much of an advantage there against the other countries' much lower prices and costs. So yeah, that's quite the plan. Who knows if it's going to work? But I mean, they have 10 years to figure it out. So that's quite a bit of time, I think. And that would be all for today. Thank you very much for watching this episode of This Week in Business. I hope you have a lovely day, and I hope to see you again next week. Goodbye.